Today is Friday, and what we will talk about and what we do have every Friday on Buy Now Sell Now is BNSN Pathshala. Here we will have the technical analyst today, that is Hemen Kapadia, who will be talking to us about the divergence and how that actually works. Hemen, very good morning. Thank you so much for joining in with us. And today what you're going to talk to us about is divergence. How does that play out in terms of the technical analysis? What is it there?
A very good morning to you, Penny. Very good morning to Shell. Thank you for having me on the show. See, basically the idea is if the stock makes higher tops, higher bottoms, or moves at a particular speed, you want the mechanical indicators to also follow suit. By follow suit, I mean to say support the move. Most of these mechanical indicators, Vinny, are based on moving averages. They are obviously based on the closing of the stock. But when the internal speed, the rate of change differs. There are different indices, obviously, different indicators, but generally it compares the price, the technical situation of the stock today vis-a-vis maybe the index or something compared to, so let's say 10 days back based on the time frame. Now, in this, what we've done is there are two stocks I've picked, Vinny. The first one is Minda. If you look at it just below on your screen, when the stock made a new high, the MACD made a lower top. So that is what is known as negative divergence. Now, negative divergence was the first part, Vinny. Then it gave a crossover sell. So followed by negative divergence, it has given a crossover sell. And digressing just a wee bit, if you draw a trend line from the bottom to the bottom, that has also been broken. But basically, we are focusing on divergence. So this is negative divergence. Stock makes a new high. Indicator doesn't follow suit. Stock making a new high, indicator makes a lower high and then gives a sell. So, excuse me. So this is negative divergence. On the other hand, what we can do is we can look for positive divergence, Vinny. If you look at Asian Paints, in this I've taken the stochastic, I've used a different indicator. Now, if you can see the bottom, one more thing, just to add a slightly another point, uh, Asian Paints has formed a rounding bottom on the daily chart. If you can see a small saucer sort of a pattern, okay. But once again, we are focusing on divergences. So if you see the bottom where the stochastic has made a bottom and you compare it to the bottom of the stock. Now, stock has been here for some time and it's been fumbling, meandering, going nowhere. But in the meantime, the stochastic has made a higher high. If you can see the previous high of the stochastic, it has made a higher high and has gone up. So this is known as positive divergence. When the stock has gone nowhere, it's still dwindling, hanging around near the bottoms. While not only has the stochastic perked up, it has crossed the previous small swing high. So this is positive divergence. So you can use these along with overbought, oversold situations. So this is divergence, and various indicators can be used for positive as well as negative divergences. Vinny.
Well, thank you so much, Hemen, for actually doing the BNS and Pathshala for us this Friday. And we've learned about divergence and Hemen explaining that for you.